Andrew Thompson here. This is market trading. This is a share I traded a couple of weeks ago. Quick scalp run, if you like, in and out. Having said that, I've also just re-entered again alongside. So I'll give you the reasons why I entered to begin with. We had a big bear run here, basically $20 all the way down just up above $5, 75% decline, bloodbath basically. When I see this sort of thing happening, when it's overdone, when everyone's super bearish, you've got to start looking to go the other way. That's the way money is made. It is not going with the herd, who are basically 95% long all the time. Because it's a big bear run, I have to look at the big picture. Big picture for me is minimum weekly. So I went right back to 2003, basically 12 years. And this big bear run we had down here, which at the time would have been huge for the stock, that was its record high at that point. We had 1385 days top to bottom. So it went down from 05 to 09, 1385 days. And from the top up here, just under $20 to around here at $5.50 odd, we went down 1389 cents. So I've got 1385 days and 1389 cents. I'm 4 cents out in 12 years. That's close enough for this black duck, but that's not enough. I need to know a bit of time in this big bear run, weekly bear run. We had 862 trade, which is basically 6 times 144, bar 1 or 2 trading days. And it's also in 1242 days or 1224 degrees. The average of those is 1233. Quite often I'll do the average, just like I do the average in double tops and double bottoms. It works well. And this low from here to this major low in here was 1232. So we're getting a bit of equality here and a bit of equality there. Also a range between this major low back in 09 to the latest one in late 2014. Was 288, 2 times 144. When you see that sort of number coming up between the lows, especially in a commodity share, take note, because Australia, especially UK too, but Australia works beautifully to the number 144, and it works especially well in commodities. So keep an eye out for that. They did it in also 284 weeks. So basically, for me, that's one cent per week over that time. That's a one-to-one, plain old Gann one-to-one. I don't use them that often, but when I see that, I'll take it. So that's the weekly chart. Now we have to go into the internals, the daily internals. Now this is a newer chart format. I use a previous chart format when I want to do just a few numbers, but this is Market Analyst. I basically use this because it's got a great little tool where I click on a bar, click on the next bar, and it gives me all I need to know: the days, the degrees, the traders, the range, the percentage, everything in one click. I can basically now do about 600% more work in the same amount of time. And geez, it saves a lot of batteries on my calculator and saves me having headaches. So this is the internals. This is from the recent high, not the major one, but the recent high and a few lows. I basically want to see on the smaller scale how the recent low shapes up. Now one thing jumps out at me here strongly is the little major low we had here up to this high here was 248 days. Sorry, trading days. Then the brown, this top to that top, down the bottom, so top, so 248 over here, from here down to here, it's 249, it's the same number. From this low to the low was 247, once again the same number. From this low to our recent low was 250, a couple of days out, no problems. But also here, I had 362 days down. Now over here, from the last high before our final low, we had a range of $3.64. So I had 364 cents coming out at 362 days. Now whenever I see the circle popping up at 360 to 365, 360 to 365, I get very interested. So you'll find this 249 number, I have no clue of why it comes up, but I find it in all markets, and it usually it's a precursor to a strong move. So when I see it all coming out the bottom, I have to look at it. So I missed the bottom. Once again, as I keep complaining about it, I'm very busy. I don't get a chance to look at everything all the time. But if it's going to continue, there has to be a higher low. A spike up about a higher low means it's going to a new low straight away. So I kept my patience, came back down, it consolidated through here, had a little bit of a false break, but when it broke above that with that bar, I was in. You might notice it had a spike up and it came back down to where it broke out of. Classic place. If you missed that again, that's your last chance to get in. Took off. I got out above at here, a good reasonable time of price at that point there, so I got out at that point, came back down again. Now it's broken to new high, so once again, that negates all the time and price I had that high because it's gone new one. It's come back in to consolidate. I've now gone long above here again. So I'm just waiting for this, hopefully, to go on. I'm suffering a couple of days of pain down here because it's gone down. But my stop is just below here. As far as I'm concerned, this could keep going because, as I said previously, on the weekly, I got strong weekly time. So with a strong weekly time, I expect a bit more than a couple of dollars range. So we'll see how we go. Once again, I'll keep you posted how it goes. I've got a couple more shares. I've got to show you what I've done in the last few days. I'll post them soon. Goodbye.